Um, Good morning. Yahoo! I, I like the music. I like this one. I always come back to it once in a while. The last couple of times I put some different music, but hey,
No, this is a good
uh, this is a good one. Good, nice, happy music. So,
one.
well, good morning to our viewers and our listeners. Welcome to the show, Coffee Time with Marie Torossian, CPA. If you are returning to the show, welcome back. If you are new, please give us a thumbs up or a hands up in the chat so we know you are new. Go ahead, subscribe, like the pages or the channel that you are watching us on. We go live every Thursday at 10 a.m. Eastern time on Facebook, LinkedIn, and YouTube. I'm your host, Marie Torossian. I'm a CFO, an auditor, a certified public accountant, and a chartered global management accountant. I use my proprietary and registered methodology to help business owners that achieve their first million to 10x their profits. I also have a matching e-course that is ready for you to access at theprofitlab.biz/programs. I'm also a Grant Cardone licensee, and I coach businesses in sales, marketing, finance, and money mindset. You can check out some of my plans on the profitlab.biz slash plan slash wait profitlab the profitlab.biz/plans dash pricing. Sorry guys, it was a mouthful. I'm also the author of two books, The Complete Guide to Business Growth and The Business Owner's Guide to Operational Accounting. So you can find those books available to you. And actually, I added a workbook there for financial health. So you can check that out too. And it's going to be on the profitlab.biz/shop. So with that, I always have my friend and tax colleague Pedro Gonzalez join me every Thursday. Good morning, Pedro.
Good morning, Marie. Good morning from South Florida. It's
Woo!
hot.
As hot as can be.
But no, still beautiful, and it's an awesome day.
It is an awesome day. Every day we wake up is an awesome day.
Every day, exactly. That's a good point. Thank you. So, with that said, this is Pedro Gonzalez, CPA, your business and tax strategist, helping you and all your clients with tax minimization. I know that a lot of people are concerned about their taxes, developing tax strategies to minimize the tax bite. Uh, Exit strategies, as I mentioned before, many times all of us are going to exit. It just depends how. So now's the time to start planning, to start looking in how to devise the strategies on how to improve the valuation of your business and minimize the tax bite when we are ready to exit. And cash flow. Cash flow is lifeblood for any business, regardless of size and industry.
Yes.
So we have ways to help you, analyze the numbers and go beyond the basics that most people receive on bookkeeping and accounting services, in helping your business improve liquidity, which again is the lifeblood of any business. I have the real estate investors tax guide. It comes with this an e-course that follows after, in the newsletter that goes for those who are interested in the real estate investment world. It's still a great opportunity out there. If you decide to venture into that area, we'll be glad to receive your information and see how we can help you do it properly.
Absolutely. And I'm just making sure to run the banner there. To get the real estate investor guide, go to pedrocpa.com/the real estate investor guide. You'll be able to sign up there to get the ebook, and then you'll be offered the newsletter and all that stuff from there. So with that, before we start today's conversation, I wanted to. By the way, guys, if you see my eyes going in different directions, because I have like three screens and I'm constantly watching the chat and all of that stuff. So bear with me here. Just a quick summary of things that we've talked about in the past. We've talked about financial analysis. We've talked about E2 investor visas, which, by the way, guys, there's going to be a lot of investors coming into the U.S. Because of different things happening around the world. there's a lot of money going to come in here. So if you want to sell your business, bringing to what Pedro was saying, this is the time to make sure your business is purchasable at the highest price possible. So if you need help getting your books in order, you want to get a valuation done, you want to see where you stand, this is the time. So we are here to help you out.
Very good.
Also, we've talked about the IRS audits and the financial audit differences. And as you know, with the Inflation Reduction Act, we've covered that section as well in the past two episodes, last episode and a few episodes ago. And we'll be talking more about that. There's been quite the fear of, what is going to happen. Please go back and check some of the IRS audits that we've covered in the past to kind of get you prepared on what to do. We also talked about messy books a few times, and we keep repeating that. It is so important. Don't panic. Don't freak out. Just go check the videos or the audio on the messy books episodes, and you'll be able to get yourself in order and check the boxes. Did I do this? Did I do this? Just use it as a checklist, and you'll be fine. And if you need extra help, we're always here for you. With that, so today's conversation is going to be completely random because it's more like situations that we encountered this week. It was very interesting. One of them being the ERC tax credit, right? Pedro, I'm going to let you kind of maybe give us another overview. I know we've covered that in a past episode, employee tax retention credit. But could you please give our audience just a brief overview, and then we'll get into the specific situation that we encountered.
Yeah, the ERTC, the employee retention tax credit, believe it or not, still available. This came out of the CARES Act back in 2020, and it's still available for those that want to apply for it. I would encourage anybody that has not done it to at least have the calculation, and we can certainly help you look at your situation. Just send us there'll be some basic information will be required of you, and then we can see if you still qualify for that. But it is available, and all the specifics. My suggestion is to go back into the prior episodes, and you'll find out the details behind it. Now the situation that you and I were discussing,
yes,
that's an interesting situation because at least for tax, from the tax standpoint, one of the confusions is, and it's happening right now. For example, somebody that now in 2022 finds out, hey, I can apply, because you can still, the thing is that you can apply for 2020 and 2021. In reality, the period of coverage for the credits is the third quarter of 2021. However, you can still apply. You can apply right now, and you have to go back to 2020, the payrolls of those years, and 2021, the first 3 quarters of 2021, and still apply for that. Now, the question is, there was a lot of confusion back in 2020, at the beginning of 2021. Okay, so how do I treat this for tax purposes once I receive the credits? So imagine now in 2022, you're going to now apply, and then you're going to say, okay, so now I'm receiving these dollars, but the calculations based on deductions back in 2020 and 2021, assuming that you already filed. So in those cases, what you need to match those. You cannot take those credits in this year in 2022 return. You have to actually amend those returns.
Right.
You have to amend those returns 2020, 2021, and apply those credits in the year where the deduction that were used to, or in this case, the payroll expense that was used for the calculation. You have to go, and so therefore you get these dollars. You have to say, okay, these ERTC that I received this year is related to 2020 payroll. I have to amend 2020 to then apply it to that return.
Right, absolutely. And so the situation that we encountered was, the 2020 was in the books, was updated, corrected, so now it was going to be amended. And then there was, so the 2021 related credit should be recorded in 2021. And then, if you haven't filed your taxes for 2021 yet, then, it's still good. You can file it now. But if you have filed it and now you're getting the credit, now you have to amend it. So then the other situation arose from this was, in this specific client's case, is that before they received the actual credit from the IRS, the actual dollars back, they were factoring it, right? And by mistake, the factoring fee and the commissions, all that was recorded in 2021.
Yeah.
But the actual factoring agreement is in 2022. So guys, this is where, you start messing up the books really badly. And creating chaos. You may end up amending the tax return with the wrong numbers. And so this is where you really, really want to make sure if you're trying to do something like that with any kind of a receivable, it could be your ERC tax credit, or it could be some other receivable that you are factoring it out to receive the money now, you're going to go by the agreement date to record that type of transaction. So if the agreement is in 2022, the transaction needs to be recorded in 2022 and not going back to that. I hope that helps out, guys.
Yeah. No, it's a good point. It's a very good point, because in this scenario, you're talking about two different transactions.
Yeah.
Each one has to be recorded according to the event. The factoring happened in 22, even though it has to do with 2021, 2020 ERTCs. This company was successful in factoring that. But then the factoring is a separate event, and it has to be recorded separately. And in that case, whatever the factoring expenditures, fees, whatever, is a 2022 event.
Right. Absolutely. So this was one of the very cool, unique situations we saw there. And we really wanted to make sure, oh my goodness, if that many people do that and they record it bad, so we want to make sure to give you guys, these unique situations that happen that you may not even think of, and you may end up doing it wrong. And these are not something that you're going to find all the time. If you just, how do I record ERTC tax credits? That's not going to be something you're going to find easily. So now we're telling you. Okay, so another situation we encountered this week was one of, a foreign individual filed for foreign individual, an investor who's still waiting for his social, ended up filing to get an EIN number for his company through a cousin who has the social security number. However, there was no transfer filed properly, and now they have to do the taxes. How do you solve that, Pedro? How do you solve this?
Yeah, I think this one is, again, I'm not going to get into the specific of the legal, but I think something that could happen in situations like this is, in this scenario, I don't know why they have to use this other individual because they could have set up the corporation with the foreigner. They typically what happens is the foreigner will have to then file a W-7, get an I-10, which will be temporary, at least to allow him or the individual, the foreigner, allow them to operate with the I-10, and it is like, for example, filing for EINs, even in some cases, open bank accounts and things like that. At least it gives them a temporary number that they can start operating. But in this specific situation, what do you do? Let's say that you're already in that situation where you used a friend or a family member to at least file for the EIN. Then the solution is that, well, you have to now replace that person, because now that individual, if you do nothing, what happens is that if you do nothing, the IRS doesn't know the operating agreement. They have no copy of that. You have to understand that maybe your operating agreement mentions Marie as the sole member. Let's assume an LLC. Marie, he just got into the country as an investor, and she's now opening this operation here in the United States, and she shows up on the legal documents as the sole member. But for whatever reason, instead of Marie submitting the EIN application to the IRS, putting her name, because she doesn't have yet a social, she could have gotten an I-10. But let's say that she didn't, and so I need to do it right now. So she puts her, let's say, her friend, a family member. So now he sends that application to the IRS. What the IRS knows is that we're assigning an EIN to ABC Torossian Investments LLC, where now that's all they know. They know again, remember that the LLC is a creation of the state.
Right.
We have discussed it before. I'm not going to go into the
Yes.
specifics, but you have to understand that for IRS, an LLC, in essence, it doesn't exist.
Right.
You know what I mean? It's either, individual, corporation, partnership, trust. That's it.
Right.
So you go with this LLC and you don't say anything else. They're going to say, well, instead of Marie, it shows up, I don't know, her cousin Joe. You know what I mean? So now Joe is the one that it shows up on the application. And Joe is kind of, for purposes of them, they say, well, Joe is the one applied for the EIN. We're going to send this. And now Joe's going to show up on the IRS records as sole member. Now it says
Right.
Joe, sole member of, ABC Torossian Investments LLC. Now what happens is, legally, Marie is the member. She's the sole member, and she's gonna go and file. Now, nothing done. What could happen? I'm not saying this. It could happen is that now there's going to be a mismatch because the IRS is expecting is Joe to report the income and expenses of ABC Torossian Investment LLC, but instead Marie is the one showing up on the records with this entity.
Right.
Where Marie does not show up on their database.
Right. Right.
So the way to solve it is an 8822B that is filed, and to change the representative, in essence the representative for the IRS records. Again, the legal documents, Marie is there. What Marie needs to do now, she goes and file this document. Unfortunately, it cannot be faxed, it cannot be emailed, it has to be mailed, it has to be signed. It cannot be digital signatures to prevent any further, because we have seen situations the individual goes and do these digital signatures and they kick it back. Now, understanding that the IRS backlogs and so on, this might take a while. My suggestion, certified mail, keep a copy, and to show record that, okay, I started here, we did this incorporation or registration or organization documents, then I changing the representative, and now I'm filing. Now, Marie's going to go and file. Let's assume a single member, she still has until October 15th to file, but she files that document, my suggestion, as soon as possible. So then at least you can show that I submitted this to the IRS. Here's my records. And now Marie is going to show it on her tax return. She might receive a letter later saying, oops, Marie, you have something here that does not belong to you. Or we have some further question. Marie can then attach a copy in response to the IRS question and saying, here is my change of ownership. It might still not be on the record, so IRS doesn't know yet because it's buried in a pile of correspondence. But at least Marie did the prudent thing, is that she get copies, she sent it certified. She has proof that the IRS received it because she requested a return receipt, and she can send that now to the IRS in response to that letter.
Yeah, now that this is great information, because I know this is going to happen, and I really wanted to bring it up because, like we talked about earlier before we went on the show, and then as I mentioned in the opening remarks, is there's so many investors coming into the U.S. This is something they need to know. If someone here that's helping them out, in the U.S. they have someone helping them out, please pay attention to these things. Don't complicate the matter. There is a way to just have an ITIN and have a business as a foreigner in the United States. I mean, I don't think any other country does this. I don't know. But, they've made it very easy for foreigners to open up businesses here or start businesses or purchase businesses here. So I don't see why there's a need to complications. So keep it easy, get the ITIN and then get it done.
Keep it simple. Exactly. Simple way. And find qualified professionals that can help you in the immigration process, setting up the companies, the accounting, the record keeping, so that you can show your investment that you made here in the United States. All of that becomes critical to all the process documentation. You're filing with the IRS. All of that process needs to be properly documented, so then you prevent unnecessary headaches.
Yeah, absolutely. So we had another situation, I guess, not a situation, but we've had and you mentioned it too, a lot of people are starting to really worry about the IRS audits. And I know we've covered it in the past, And with the new law of the the Inflation Reduction Act and the new hiring of agents and all, everybody's kind of like a little bit worried. So what can they expect as to IRS audits? And hopefully they've done their books correctly. Hopefully they've done everything correctly, so they shouldn't worry.
Yeah.
But if they are so worried, obviously we can help them out. But how far back does the IRS go and check?
Yeah, no, because that came up in a question. Yeah, I was talking to somebody and they asked me how far exactly. How far can you? Well, again, you Google the general rule is 3 years. 3 years from the and again, it's 3 years from the time you file.
Okay.
Okay, so meaning, I think you understand, if you file today, 2020, 2021, guess what 3 years start counting from today?
Yep.
Okay.
And we've been saying that for a while.
I know, but it's important because all of this is why you have to hire the right people, and because there's different time frames and time clocks that you have to run, because some people assume I file it today and then I file 2020. Well, 1, 2, so I only have a couple months left. No, the IRS says no. We start counting from the point you file. But then again, that's the general rule. You go to the website. I'm going to read to you what the website of the IRS says with respect to IRS audit. It says, generally, the IRS can include returns filed within the last 3 years in an audit. If we identify substantial error, we may add additional years. And it says, we usually don't go back more than the last 6 years. So they're already telling you there that the 3 year is the general rule. Generally, the IRS. So that's the general rule. Now, if they identify substantial errors, then they can go add additional years. And again, they say no more, usually no more than the 6 years. And I keep highlighting these keywords because that's, what happened with the tax code. The tax code uses certain keywords that can open this. Now you say, well, okay, so no more than 6 years. No, that's not what it said. What it says is usually, meaning that they could actually expand it more than the 6 year if they see fit on the circumstances. Right. But as a general rule, it's 3 years, and they could go up to 6 years in some circumstances. Now, what happens? What generally happens is when you omit, they say substantial error. Okay, so again, what is substantial error? Because again, they don't define it.
Right. It's so general. All the terms are so open and general.
Exactly. That's how the code is written. That's why, again, you gotta dig in. You gotta continue. It's like an onion. You continue, and then and that's why you're gonna be crying. Really.
You can set my mind.
Exactly. You continue peeling that, and it's like, oh, damn it. But
the more you peel, the more you're gonna cry.
Yeah. So the substantial error, as a general rule, is when you omit more than 25% of your income.
Yeah.
And again, don't quote it like it has to be the exact 25%. What if it's 24.5 or 24%? I'm telling you as a general rule, if you omit it. Now, again, keyword omitted. Believe it or not, the definition of the IRS of omitted will most likely, most people will not believe what they consider omitted, because when you and I talk about omission, is what? It was left out.
Left out completely.
Yeah, Marie, you omitted to report XYZ 1099. You left it out. That's omission. The IRS has argued heavily on this, and it has been debated, believe it or not, has been debated even in tax court, that omission, according to the IRS, and I'm going to read something here, it says that the IRS has more of a broader view, obviously, of what omission is. And they're saying also that omission also means when you underreport, meaning that, your argument that say, Marie, you receive a notice and say, Marie, we're charging you with substantial underreporting. You say, no, but I reported. It's just that I reported, for example, let's say something that had a basis of let's say 300,000, and then you go ahead and say, well, I'm going to report that my cost is let's assume that really was 50, but Marie goes and puts 100. So she reported.
Yeah.
You know what I mean? So what happened is that she, bumped up the cost from 50 to, let's say, 100 and reduced her gain.
Right. So she underreported her.
She underreported, exactly. But the IRS say, no, she omitted. She omitted. They're thinking that, well, she omitted that portion that she did not report.
Right.
You know what I mean? So, and so that's one you can get yourself into a little bit of trouble. I know a lot of people are getting concerned with the situation now with the IRS funding, all of the information going out there. We discussed this in details on previous podcast. Again, my advice is not to panic. Is that if you believe that you have some things of concern, my suggestion is to go back and start, if necessary, to amend. The time is to amend this now, not to wait until you get already the IRS notice. You believe it or not, once you get a notice for audit, you cannot amend. Even if you have, you received the notice today, so oops, let me go back and amend it today. The IRS can, in essence, it will not process anyways because you're already under audit.
Right. Understood. Yeah.
So even though you might go to the agent and say, oops, no, I already reported, it is not valid. So that's why if you have situations of concern, the right thing to do, the prudent thing to do is to start addressing it now. If it's a bookkeeping issue, let's say your records are poorly kept, now's the time to fix it. If it's an issue of something that you believe, hey, maybe my cost basis was not, I probably fudged it a little bit, is to seek advice now.
Right.
Because the big concern is going to be when it comes into the what they consider tax fraud. And this is we can probably discuss that in another topic.
Yeah, absolutely.
But that is something that if you believe that your numbers are there's some areas of concern where the spread is too big, then you enter into another arena, and that is tax fraud, and those are heavily penalized.
Yeah.
So that's something to be concerned.
Yeah, absolutely. And then we mentioned it before too. This is the best time to plan for not only for this upcoming year ending. We're only 3 months away. Technically, September for me it's the beginning of September, but I feel like it's almost finished. But it's almost the last quarter of the year, so this is a good time to start looking not only forward, like how this year is going to end, what you're going to plan for this year and next year, but this is a great opportunity to look back and see if there's anything that you need to fix, amend, correct, so that you can take care of it, in a proactive manner, and you can show that good intent, the due diligence, and all the right things you're trying to do.
Yeah. And you brought up a good point, and not to get ahead of a future conversation about tax fraud, but is intention. It's one of the areas you're going to look at, and so by you correcting, the processes and so on, you can demonstrate, it was an error. I was unaware of the law. So you have time now, like as you say, Marie. Now is the time to not only address prior years, but to correct 2022. Now is the time for planning. It's a good break point. You can look at your 3 quarters and then start preparing for the last quarter of 2022.
Right.
To start making whatever modifications you need to make as far as your approach, deductions, whatever the strategy you need to develop towards the end of 2022.
Yeah, absolutely. And I know another conversation is to be had on definitely separately on the IRS fraud, which I'm going to put a note now, so we'll cover it next time. And the other thing I wanted to kind of cover, I guess, in the upcoming episodes is, when taxpayers choose to, let's say, keep their books in accrual basis, and then they do the taxes on cash basis, or vice versa, or they keep changing, which actually creates quite a chaos in itself. So I think that's another area of conversation I'd love to have in the future episodes.
Yeah, there's a proper way to do it with the IRS whenever you have a change of accounting method, and it has to be done properly. Otherwise,
Yes, absolutely. So I hope everybody, we had quite a few people joining us today. was very exciting. We always look at the number. I keep the check on the number always, and the interactions. And I love it that there's more people, really benefiting from our show and a podcast. And as you know, you can always get access to the recordings, going back to the channel, on YouTube, Facebook, or LinkedIn. You can also have access to the audio version on multiple podcast channels like Apple Podcasts, Google Podcasts, Amazon Music, and many more, like Stitcher. There's so many of them. But to know exactly where you can find all of them and the links to how to listen, you could go to maryterrossiancpa.com/podcast, and there you'll be able to listen right on the website, or you can choose one of the other podcast channels that we are on, and you can listen through your favorite channel, our show. So stay with us, and we're going to give you all the strategies and rules and regulations related to accounting and tax to help you with your business. So with that, it's time. It's the 30-minute mark. So we want to be cognizant of our listeners and viewers who are business owners. We want to be cognizant of their time. So with that, as always, I will leave you with the quote of motivational speaker Jim Rohn: "You are the average of the 5 people you spend the most time with." I hope we are 2 of the 5 people you're spending your time with to learn and grow your business. So until the next episode, I have a wonderful week, and see you next week.
Take care.
Bye.